The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil CHapman.
Hi everyone, Basil CHapman. This is July the 30th, Tuesday, and we're almost about to wrap up the month. Wow, this is going to be so interesting because for subscribers, I've been showing the monthly charts, and there are certain expectations, certain things that have happened very, very often in this particular leg. We don't know if it's going to happen again, but we are anticipating something like that. So let's go straight to the numbers. Thank you, Steve, for a great 2 hours. Of course, today you got the options hour coming up straight off this Think or Swim. I'm not sure who's on today. And then, of course, you got Daryl Martin. You got a full house. Daryl Martin. You got Dave White. You got Andy Heck, Tom O'Brien. Wow. What a lineup. So let's go straight to the market. The Dow was, in fact, let me just, I've got the E-minis because people ask me about this. So I'll just let me do what I usually do in the very beginning. I always show the E-minis. There's a downtrend. I call this the falling axe. It's this declining, expanding cone to the downside. If the S&P is able to spike, and there's the E-minis, spike decisively above the 1688.50. Let's call it 16. It doesn't even have to be much, but it needs to spike right through 16. Oh, let's call it 1689 to 1670. The moment it gets there, that all of a sudden the technicals will say there's enough energy to go a little higher towards the previous high of great importance, and that's the high of 1695. That's a little bit much. Let's call it 1693. But if there's a failure here, that's that H pattern that goes to an M pattern that continues and then breaks down, goes towards the low. So the E-mini 120-minute charts is be a little careful here. Nothing yet is showing that it's going to be a sharp move to the downside. I can tell you this, if there's a 1.5 to the downside, the MACD will turn down, and that'll be the negative that we're looking for if there's going to be a turnaround today. Now, there is an alternate wave count to the daily, and I just want to do this quickly because this is not the root. The root, in fact, is the SPX, and the XPX is decisively made a peak E. It's held very nicely above the 9-period exponential moving average. Let me just quickly, for those of you new to my work, 1560.33 was the low of June the 24th. All you do in the Chapman wave, you had a nice email from a subscriber, from one of our tigers actually, who's been a long time tiger, and he wrote to me to say, hello Basil, we met some years ago at one of the tiger workshops down in Florida, and I've been following your methods ever since. Once you start counting waves, you will never look at a chart again without at least a quick count. And that is just, I couldn't tell you how many people tell me that once they've observed this phenomenon about looking at each successively higher peak, perhaps even more than the troughs, but the peaks absolutely. You cannot stop it because it is your benchmark. It is just the it's the easiest technique you've ever heard of. It does get more complex as you go higher. Now, complex in the sense that it matures, so that you've got to go for, added levels of ingenuity, of rules that I've specified very articulately in my Chapman Wave methodology book, Understanding Chapman Wave Methodology. So he goes on to say, my question is non-urgent. I can't remember the words to the counting song. Yes, I do know what to do, but when I try to explain to someone new, non-believers abound, I would like the song words. I've checked my notes and even your CD where I can find them. Where can I find them? Anyway, I want to thank you for years of education, the best part of which is that the wave count forces me to accept what is. Being a scientist, my fellow workers are always looking for an explanation. This only explains why they're not very successful at trading. Thanks again. And I do appreciate. Well, I sent him the song, and he just sent back a note saying, "Thanks so much, but with the small letter troughs, maybe to express 9, 10 levels of emotion. Maybe so." Oh, I discussed what I was thinking about in terms of the troughs, that it was actually an expression of human emotion, 4 or 5 levels of emotion. we've got that. That was very nice. As I will match, so maybe someday I will match up the emotions of Jason Zweig's Your Money and Your Brain chapters, of course, only if the 9-period emotional moving average is on my side. Have a great day. Very nice. So, let me go through this again. From the low of the S&P at 1560 on the 24th of June, each successively higher peak, that's the peak on the 27th at 1620.07. Then it pulls back for one day. There's a lower high bar. I call it the high bar. I know there's a lot of terminology when people just, when you look, if you go to Tiger TV, if you're looking right now at to Tiger, if you're in the den, you see the charts really clearly. If you go to Tiger TV, you will see those charts. It's very important that you look at those charts and you say to yourself, aha, let me count the waves. That's that, what was Elizabeth Barrett Browning? And even more importantly, what we're looking at here is that if you're looking at the home page, go to Tiger TV. That you can click on those icons at the top on the right, any one of them, and it gives you the pictures, gives you the charts. Let me just see if I've got the volume down. I haven't got the volume down. Yep, there it goes. And you can see those charts. So the S&P 1560.33 was the low. It goes to peak A. The next entire bar has a lower high. Instead of 1620.07 or 08, it goes to 1615.94. That's a peak. Then it goes to peak B at 1626.61. It's a peak because the next bar after the 1st of July is lower. Now what happens is at the moment it goes 1 penny above 1626.61, that starts leg C. And that's called the floating ladder. I'm going to show it here. That's leg C. That bar, leg C. That bar, leg C. Leg C, leg C, leg C until peak C. Because on the 15th of July, it goes to 1684.51. The very next day, it's less than a point lower. But you know what? That counts as a peak because following after that, you've got leg D starting above 1684.51. That's leg D, 1693.12. On the 18th of August, pulls back, starts leg E, and E is 1698.78 on the 23rd of July. Now, unless that's taken out, that's going to be peak E, and normally at peak D or E, or maybe even F, the 6th highest peak, you start to get a pullback. That pullback can use time, or it can use price. At this particular point, all it's done is held price. Why? Because the fast-moving average of the MACD, that moving average convergence divergence, that green line is saying, hey, I have not yet crossed negative. I'm close to it, but I haven't. And until I do that, you can't give me a down arrow, and you certainly can't give me a down arrow if the stochastic is above 82%. So it's going to take end of the day for a sharp move to the downside, number one, or tomorrow for a sharp move to the downside to start to make this black line, the 9-period exponential moving average resistance. Now, why did I say to my subscribers of my opening call that I see the upside is limited? There is a chance that we could rotate through some very, very horrible charts that are just starting to show some strength. We tried one today. We've got one that's kind of working now. One of the worst sectors that you could even imagine for a long, long, long time. I see some strength. Well, that one's working. One that we tried today, we got stopped out almost immediately for a 1% loss. Got in, got out. That's how quick it was. I'm not sure why it dropped so quickly. It should not have dropped as quickly, but I'm out. I won't even look at it again for a little while. But it is on my list because I want to try to find those stocks that we can, like we have a stock that we bought in April that we've still got. It's holding beautifully. We wanted to add to it. We just missed adding to it. We've got another one that we took profits in about a month ago that we had all the way from November. I like that. I want those longer term buy and holds, Rip Van Winkle stocks, I call them. Now, here's something that's really interesting. So I'm going to quickly go back and say there's divergence between the E-mini, S&P E-mini September contract, which is in leg B/C. There's a case that can be made that it's a C. Well, I have to go to the root, and the root says that there's a peak E in the S&P. That's the root. This could fail. They don't usually fail, but at this point, I just got to suspect that upside is limited. I have another technique that I've been showing subscribers, and that technique says that until this one moving average crosses back down again, there's upside. There's a limit to the upside. That doesn't negate the fact that the fast-moving average of the, I'm going back to, if you don't mind, just for the moment, SPX, because it's the root. I need to talk about the root. That doesn't negate the fact that there isn't the possibility of what I call a rogue wave. In the Chapman wave methodology, there's a particular technique that I talk about. I'm going to just show something here. This is about troughs, but this is actually also about peaks, because I also did peaks in my CD introducing the Chapman wave methodology. Once you make a peak, D, E, or F, with a down arrow, then you're looking at the change in the trend. You're going from a buy mode, the tide going in, to the tide going out. As simple as that. Now, what's very important for me is that when I'm looking at, when I'm looking at the potential for a sell mode, in other words, for the tide to start coming down, I have very specific things. But if you look at this particular chart here, it explains very carefully how I use the 80 period and the 80% line and the 20% line in the slow stochastic. Usually they talk about 70 and 30. I've always stressed it. For years I've talked about 80 and 20 because those are the parameters that give you the best results on any of these momentum indicators. Now, here's something also important. You can get a sudden spike up like you did right there to the E and the F because the stochastic was failing, but the MACD fast-moving average was still strong. And I said, we've got to be aware that that's a possibility in this particular technique. Therefore, we've got positions, and I've kind of tightened up the short positions that we have on the indexes themselves. Why? Because this is the very moment, today and tomorrow. You've run out of time after this for, my thinking is that you've run out of time for a sideways action to continue. You're going to have a much sharper move one way or the other. So I just wanted to be prepared for that. So here we are. Now let me move this one way. It's a 120-minute chart. The weekly chart has that V-shaped pattern. We spoke about it yesterday. I can't remember what the stock was that we were talking about. I spoke about those Groucho Marx eyebrows. But this has gone a little higher than normal. In other words, the S&P last high was 1687, and this one is up in the 1698 level. So it's a little higher, and it actually closed above that left side peak. Now let's talk about the month, and I was asked if I would talk about this in my show today by one of my subscribers, and the question was, let me just get to it right here. The question was, would I show in a little bit more detail how awesome the move, what I call inside track, this line here, how that inside track has been such a strong repellent. So I'll try to get to that. There's no rush to get to it right now because we still have to wait for tomorrow's Wednesday's close, for the monthly to finish, but I'll get to that. In the meantime, let me just say the Dow's down up 12 at 15,534. The S&P's up 3 at 1688. The comp index is up 21 at 3620. Gold is down 4, and we'll be right back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman. I'm going to look at, in a short while, I'm going to look at Apple again. We did that the other day because Apple's just in leg E. But we've got a caller on the line. We've got Ken in Fort Madison. Hi, Ken. How are you?
Good morning, Basil. I'm very good. Thank you.
Good.
I talked to you a couple of weeks ago about municipal bonds, and you asked me to call you back last week, and I didn't get it done. And they haven't changed much. They're still on the downward trend. I just want to get your idea on it. I don't own any of them. Okay, so you do have a question about a particular one. Am I correct with IIM? Yes, that's the one I call.
And that's the Invesco Insured Municipal Income. Now, right. I'm going to make a suggestion here that says, under these conditions, I would be looking at this as, well, first of all, as a potential bounce, but I would not be. I would be treating this as a stock. IIM is trading at $13.54, down 4 cents. It's got a pattern. Now, this is fascinating to me. I did this quickly just during the break. From the low bar of, it almost looks like it was an accident, but it was $6.97 back in October of 2008. Of course, it wasn't an accident. That was the crisis low. It ran up to peak A, B, C, D, E. Pull back, but the fast-moving average of the MACD was still really strong, so there's only a plus sign there. Then it goes to 15 round number low, but 15.71 was both the open, the high, and then 15.38 was the close in September of 2010. So it goes to a peak F down arrow comes in because it goes, the MACD crosses negative, stochastic crosses negatives, on balance volume, everything goes negative. And it falls and it goes down to 12.31. Now, this is really interesting. It starts a brand new if it goes A to B to C, and where does it end? It ends at D with this rectangle formation. And very often in a rectangle formation, there's an inside buy that tries to go higher, and that's the one that we saw that allowed it back in up to 2013. That was this whole area here in the weekly that went peak A, B minus, A, B minus, A, B minus. It couldn't get out of its own way, and then broke down, broke under the 200-period exponential moving average. More importantly than anything else, it has gone from the $17.89. I need to just type that in so I can keep referring to it, $17.89, down to the most recent low, which is really a double bottom low with a low of 13.18 the week of the 28th of June, and last week's low of 13.20. So far we can consider that it is... I'd hate to call it successful because the week is Tuesday. We aren't even into not even 2 hours of the second day of the week. But I'm going to say that there are signs that tell me that if you treated this as a stock, not as a dividend play, in other words, you would like to buy it also to receive the dividend. I'm saying, no, I would only buy it if it gave me all the characteristics of a successful test as a stock, and then it moved up as a stock, or broke down as a stock, but I would not be buying it for the dividend. But if I do say that it's a successful test and you get in, obviously you also get the dividend. Yes, that's number one. Number two to the whole story is, you might not be around in the stock long enough to get the dividend. Or maybe it's, I don't know if it's one of those that gives it monthly or quarterly. I'm not sure.
Yeah, it gives it monthly.
Monthly, okay. So maybe you get 1 month out of it. That's not going to help you if the stock falls 7% because whatever the dividend is. So I'm going to suggest, now I need to do this. In fact, I'm going to take a moment. I wanted to do it earlier in the day and I didn't, because I got busy with other things. I'm going to look at the bond chart. Remember I said that I think we're making peak B in the weekly chart, and that's exactly what happened. That high of 37.03 back on the, this is the yield, the TYX 30-year T-bond yield, the white one, that's peak B at 37.03. It's holding too well. I think that there's boy, this is tough. I'll tell you why it's tough, because we've never been here. If I'm anticipating that there could be a fairly sharp pullback, I don't know the percentage or anything, but it could be time, it could actually be price as well in the general market if certain conditions are met by within the next 3 to 5 sessions, then you would normally anticipate that bonds would rally. That would be my normal thing to say, okay, bonds will rally, yields are going to come down. If the market, because money goes back into the safety of bonds, I don't know if there's something different happening. You know what I need to do? I'm going to look at the TYX with the moving averages. I'll be back. We've got a break coming up with Ken, Robert, and Lou on the line, and we'll be back straight off this. Dow's up 22, S&P's up 4. I need to do a little work.
Thank you.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil CHapman, Tiger Technicians Hour. We are back and we're looking at a Dow that's up 26, S&P's up 478. Wow, this is so fascinating. A little sideways move here while they're waiting for the Fed. Of course, the Fed is not going to say that much. I think we've got to look at the markets as the markets. I don't know if the Fed's going to be very influential this time. So we get a good clue is exactly what I'm doing right now, looking at the 30-year T-bond yield. And that 30-year T-bond yield is saying we've got, so this looks like the Dow chart. You've got a high-level consolidation, and it's at peak D, but it hasn't broken down. And the stochastic is at 66% in this case. That's very weak. And the MACD is turning down, and yet the price, the yield is actually holding well. All right, I've made up my mind. I'm going to look at this, and I'm going to say, in terms of the IIM, I would suggest, because there was an H pattern that held the left side low, I'm going to suggest buying strength. Normally, I would say you can buy a little bit of a dip. It's at 1351. If you want to buy it either right here or you want to buy it maybe around about 1344, we're talking about 20 cents difference. So I'm in two minds right now. The one is to say that you should just wait and let it play out, because you really want some evidence that the H pattern that was just formed is not going to retest the low. And certainly, if it gets to the 1333 level, that's just not even 20 cents away to the downside, then there's a really good chance that it's going to have to try to retest the lower left side low of 13.20, and the previous one was 13.18. Here's my suggestion. If you treat it as a stock and you have yourself a 1.5% stop, and it's only a small position, the evidence right now is that it needs a lot more to break out. So either you're going to do nothing and you're just going to wait, and you probably will miss, if there is an upside break to the 1368 or 1372 level, then once again it's 20 cents, and that's where I prefer to buy strength. That's the thing. But you know what? You can have a little nibble right here at 13.51, because at 20 cents, if there's a break under 20 cents, that's really very little money as a risk reward. The big deal is that if the market takes off to the upside, this is going to drop. If the market starts to pull back, then there's a really good chance that this thing could in fact take off, and that the chart I was looking that's had a high level consolidation in leg and then peak B in the yields, that's the 30-year, the 10-year, the 5 years had a much deeper one. It's going to take a lot more to go from 1370 to break out above 1425. But just a little nibble here, or you can just wait. So I'm going to say it's up to you, but I would not give it more than 20 cents as a stop.
I think I'll just watch it for a while and see what it does. I thank you very much.
I would watch it, but those are the levels. You see, you can tell it's a very narrow thing. If it starts to move to the upside, that's going to be important, and then I'll be watching the TYX weekly chart as well. So, yeah, holding tight here is also, there's no big deal about it, but as a longer-term trade, I just don't have the evidence yet that it's a longer-term. Thanks for calling. I appreciate it, Ken.
If you get a chance, take a look at BX, will you please?
BX, I'll write it down together with Apple Hope to get to later in the day. Okay, Apple and BX. Thank you for calling. Let's go to Robert in Chicago. Hi, Robert. How are you?
Hey, Basil, thanks for taking my call. I was looking at Whole Foods Market.
Yes. Now, you have no position right now, or you still have a long-term position?
That's correct. I'm long.
Okay, you still have the long-term position. I'll tell you what I'm looking...
They report tomorrow.
Oh, they report tomorrow. You know, this is so interesting. There's a technique that I talk about, and it's just right there. I'm doing it right now. If you're looking at Tiger, anyone looking at Tiger TV, I've got a webinar up that I talk about using two trend lines. You can use them any way you want, and this is one of the ways. This particular pattern here, I call the falling axe. I gave it a nickname a long time ago, and you know, in the sophistication of the world of technical analysis, it's best not to have these little nicknames, because people kind of think it's a very unsophisticated way of doing it. I couldn't really care less. The fact is, the pattern looks like this formation. There it is. Now, what happens with it is that there's a long move up, and that's the handle of the axe. You know, an axe has an expanding blade, but the axe is actually at an angle. So the blade has lower highs and much lower lows. Now look at this chart. There's another one here that's even better. There it is. That's slide 394 in my CD introducing the Chapman Wave methodology. Now look at this. You see what's happened here? Now we've seen a number of stocks over the past couple of weeks spike up sharply to leg D or E on earnings news, and then they just kind of stall. We've seen that in many, many instances, even over the past few days. But we've already got a D at 56.83 and Whole Foods WFM 55.83, trading at up 32 cents, walking the 9-period moving average again after being under it for just 2 days. Now look what's happened. In my weekly chart, I have no other way but calling this peak B, and the monthly chart, I'm calling it F. There's a chance it could be B, but I'm calling it F to be conservative, and this is split. I've already got the notation from once before. Not only was it split when it was back at, let's call it May of 2010, I'm putting the arrow right there. Let's call it 44. Let's call it $90. So it splits. And where is it today? It's at 55. No, let's call it pre-split. And that's at 45, 54. And where's it today? It's even higher. I tend to think that stocks that split tend to split many times, number one. Because there's just something intrinsically beautiful about them. Number three is when you are looking at a stock like this, it's really difficult to game whether the rally that's just been unfolding has already anticipated a good move. Well, it's pulled back from 56 down to 54, so that's a 2-point, that's a 5% decline. I'm going to make the suggestion that because this is a longer term, essentially like a buy and hold, and because I've still got peak B in the weekly chart, and I'm expecting C and D, if I'm correct, I don't know why I shouldn't be correct, because normally you go from a P to a C to a D, then even if this declines, it'll have to break under 54.25 to get a negative H pattern, and then the big support will be right around 53 to 52. How that holds, the 53.86 level is the 9-period exponential moving average in the weekly chart. See, I don't want to mess up your long-term position, but I am going to make the suggestion, just something to think about, that because you've had a really nice gain, that at 55.80, just 2 points off the all-time high, you might want to think about taking a little bit off, and you plan that if it spikes higher and goes over 56.83, that's leg C in the weekly, that's very positive. So you can put that back on the next decline based on the weekly chart. Or if it drops, then you've got that money that you've taken off, and you say, I'm ready to put this back, and my eye says, I'll have to go through it as it goes down, but my eye says between 53 to 51, somewhere in the 52s is going to be a great entry point, a re-entry point for that money. And then what you've done, you've got 3 points in hand, 3 points profit, 3 points that you didn't give back, and that's the money that you can put back, and you'll be able to put a wider stop in. Because in fact, I was at Whole Foods yesterday, and I looked around, and I said to myself, wow, the way they've renegotiated all these different sections that was once something and now it's something else. It's invigorating. It's very good. I have no idea on a business plan if it's really going to work, but they are creative and they're really working very hard to keep as fresh as their fruit. So I think that I like it. I love your long-term position. I really don't want to mess with it at all, other than to say, right around here, if you want to take a little bit off, that money be rededicated back to Whole Foods. If there's just a horrible miss because prices, there's inflation in the fruit or food industry or whatever it is, then you're at least ready to put this back to work a little later on, and you still got your core position. I hope that kind of gives you a sense of what I'm looking at, because this falling X formation says if at any point it starts to trade into the 56.30s, that's a breakout, and it says immediately look for the test of the previous high of 56.83. So it's going to be a little difficult to game it as earnings come out and it's overnight. You know what I'm saying?
Right.
So
you got this in the monthly as peak F?
I've got it as leg F, but
okay.
It could in fact start a brand new B, because it's just been such a powerful stock, and these stocks fund managers keep going back to them over and over. But I'm looking at the weekly chart that says to me, let's not even look at the monthly. The weekly says it could pull back even as much as to between 52 and 50, and still be in this very strong uptrend. Because I can't call it anything else but peak B. I've tried. Well, I suppose I could give an alternate count of A, B, C, D. It could be D. I don't want to play games with alternate counts right now. I want to keep it as clean as possible, and it looks very clean. And that's why I'm saying to you, I would think of just maybe taking a little bit off. You don't have to. I'm just saying that's my thinking.
Thanks very much, Basil.
And congratulations on holding it for so long. That's really terrific. That's nice to be able to have something in your portfolio that you don't have to worry about on a day-to-day basis. Congratulations, Robert.
Thank you.
Thank you. Let's go to Lou in Nashville. Hi, Lou. How are you?
Good. You?
I'm very well, thank you.
Okay. I'm just wondering if you could look at the euro.
Yeah, now this is very interesting. I could look at the euro I can look at the EUR USD, and I can look at the FXE. Is there one in preference that you actually trade?
Well, I wanted to put a sell at, hoping it pops and tests the 133.
Okay, so let's do. So you're already in the position. You're in the euro. You're in the forex euro dollar currency pair, right?
Not in it yet. No.
Oh, you're not in it. Okay, so actually, what you're doing is you're trying to pre-plan to be able to go short.
That's right.
Okay, so here we are. We've got. So look at this here. I've got a. 3 fighting patterns. I love that 3 fighting patterns. We've got the euro EUR USD currency pair for a trade on the forex. It made a low of 1.279 back on the 17th of May when peak A, B, C, D. Fast moving average was just beautiful. It continues higher to E, and only at F does it give a sign with the MACD and the stochastic that it's turning down, and that's where the down arrow comes in at 1.341. It drops all the way to this fabulous support that's been support all the way in the 127s. It goes to 1.27546. Boy, to remember those numbers. 1.27456. I think I got it wrong. 27, let's call it for now. And then it goes what? Peak A, strong peak A, pulls back, makes a little mini peak A there. Then it goes to B, and now it's in leg C with the doji candle, and it's having a little trouble, but the stochastic's at 94%, and the MACD is still strong, not as strong as it was in that big move to 1.34. So now the reason, so I need to just ask you, what is the reason for you choosing to go with 1.3s instead of the 1.34 that was the high?
Oh, I see. It looked like a butterfly. I know a Gartley cell at the top.
Oh, okay, 9694. Yeah, let me just finish this. I've got a C right there, a C. 1 and a C2. Okay, let me just quickly check that. Oh, Gartley cell. That's interesting. Let me just check that out. So we got that. So you got Gartley cell going from there to there to there to there. Okay, then if that's the case, what I'm going to suggest is let's just look at the dollar, DXY. The dollar is in fact. See, the dollar's got the same thing, trough D because of the doji candle, flattening out at 7.61 in the stochastic. MACD is not yet turning down. I think the dollar has a little bit more to go down, and that's the reason why I think we're still seeing some hesitancy with the market not being able to go higher, because there are a lot of things that are just stuck in this little trading range right now. Maybe waiting for the Fed tomorrow, I'm not sure. Now, how can I plan this for you? 1 point. So I've got the dollar going A, B, C. It's in leg D. Good. And I've got the euro in the 120-minute chart in. It's a little more complex. Ah, there's the D. Okay, so it made D today. This is going to be interesting because the euro in the 120, the euro EUR USD, has just done that in the 120-minute chart. It's given that rectangle formation I always like to look at. There it is. And it says I'm in a trading band. You know what, Luke? Give me a moment. I want to put a couple of things together because this is going to be so quick and so sudden when it happens. The reversal, if there's a reversal with the dollar going higher, euro going lower, bonds actually rallying. If that happens tomorrow, I need to be sure that I give you the right figure. So hold on. I'll be back with Lou and Nasho. We're looking at the euro to see what will be the trigger point for a reversal.
Recently, Basil CHapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil CHapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're on with Lou. We're looking at the euro, and it's really, I'm looking at a point where I could safely say to him, this is about the area that you want to be thinking of shorting. And this particular point, my impression of what's going on, because this is leg C with the doji, long-legged doji candle today, that we will be back at that 1.3264 area we're at right now. Even if it goes higher, but maybe even if it goes lower because of the way the candle's shaping up. Here's my recommendation. I'm going to recommend you have a little patience. Now, tomorrow, you know what? Before the Fed gives its announcement at 2 p.m., let's look at it again tomorrow, because I agree with you up in the 132s, but there could be a sudden spike that gets closer to 134. That's the one way of looking at, and the other is that at C underneath the previous high, it could fail. At 94% in the stochastic and the MACD strong, I don't have a signal yet for selling. So I'm inclined to think this is actually going to go higher into Friday. So I'm just going to suggest, I can't give you a number right now because I haven't yet got a peak on this leg, and the stochastic is just too strong. I know what you're looking at, and I tend to agree with you that the chances are it's stuck in this trading range and that it'll be coming down. I'd prefer to wait for a higher price, and I don't yet have the signal to say that the higher price is there to give me the sell signal. So if you don't, I'm sorry to keep you waiting. I wanted to go through it in the different time frames, as well as the FXE, as well as the euro, the currency, the futures itself. And I still see enough strength that it'll be a sudden move that takes it one way or the other. So I'm going to say hold off. I can't give you a best recommendation. Is that okay, Lou? Call tomorrow. Let's see it again. Okay?
Thank you.
Thank you very much for calling. So, okay, let's just do this, folks, in the remaining, just a short amount of time. Apple, I said I'd look at Apple. Look, Apple's in leg E. Very strong leg E, up 8.84. And it's broken out of the up channel in the daily. But the weekly is the one that's the most important. If Apple's able to take a 465.75, close above 465, if it's able to close at 468, wow, it seems like a long way, but not with Apple. But if it is, it's changed the pattern a little bit. In the meantime, I'm looking at this and I'm saying I don't yet have a sell signal on the short term on Apple. The longer term looks terrible. The weekly is improving. I would not be looking to short Apple. I think it's still got some upside left, and I'm going to wait to where I get a peak E or a peak F, because it could even recycle with an instant restart. There are a lot of stocks like this, and we're on the cusp of knowing a lot of information. So that's my story there. If you're long, as the person who emailed me, yes, stay long. I like it as it is. Let's go now to UNG was the next one. UNG, I don't have anything on UNG. I looked at it the other day. It's got the Eiffel Tower pattern. I think UNG needs at least another 2-3 days. If UNG trading at 18.24, this is the, whatever it is, it's the United States Oil Trust. If it holds... I'm going to say if it holds 18. If it doesn't close under 18, but instead is able to gap to 1862, maybe I can see a counter trend bounce. Right now, I have no position on that at all in UNG. I'm kind of a little nervous about it. In fact, looking at it, then there was one. Oh, BX. That was the question that was asked of Ken. Yeah, BX is A, B, C. Now, it's very interesting. I've got a number of charts that are like this. It's recycled in the weekly chart, Blackstone Group. Leg C, this is a great-looking chart. It's a great-looking chart, but it's in a potential consolidation area. If you're long, it should have made a D, and it hasn't made a D above 24.31. That's number one. Number two is there's that pattern again with a big turnaround in the fast-moving average. If you're long, I'd stay long, but I'd start to become very cautious if BX, Blackstone, closed under $22, and I'll be looking at the SMHs tomorrow for a subscriber, and I'll be looking as well at the S&P going into the end of the month. Wow, it's going to be exciting. Paul Gigante is coming up with Think or Swim right now. He's the host. Stay tuned, fabulous show. I'll be back with Tom later this afternoon.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.